Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Starting a new week, we're coming to you from the CNBC TV 18 Motilal Oswal studios. I'm Prashant, and with me, my colleagues Reema and Nigel, both back from breaks. Short and one slightly longer, but not long. Guys, Happy New Year. Welcome back.
Happy New Year, recharged, reset, and ready for 2026, so to new beginnings.
Well, that's right. It was a good break for me. Happy to be back as well. Rested it up and going to miss the kids among everything that I did. But that's the way of life. Let's get cracking with the markets.
Absolutely. And, if you thought 25 was wild, 26, how do you describe it?
It's already started off.
It is wild and how. And events over the weekend, you can use all kinds of adjectives, but I'll just lay the news out for you because I don't think I need to do it. So over the weekend, the U.S. carried out large-scale strikes against Venezuela. Remember, over the last many months, they'd been building up naval presence. There was almost a blockade around Venezuela, trying to sort of, cut sea lanes and they were, of course, also attacking boats which perhaps were carrying drugs into the U.S. out of Venezuela. So all kinds of action. And, of course, it's now culminated into these strikes over the weekend. Now, U.S. has captured President Maduro and his wife and flown them back to the U.S. and indicted them on charges of narco-terrorism, et cetera, a bunch of other things as well. I mean, brief few hours worth of operation. Apparently, no casualties on the U.S. side, and the president of Venezuela in the U.S. custody in New York, about to face charges. So it's just quite absolutely incredible. Now, Trump essentially is saying that U.S. will run Venezuela until a leadership transition could be organized. And this is why Venezuela is important. Much has been said about this. They've got the world's largest proven oil reserves. Of course, this is their own claim. Some $300 billion worth of plus of oil under Venezuelan land. That's about 1/5 of global reserves. And of course, this certainly means near term anything can happen. But I would imagine that over a medium to longer term, this is negative for oil prices. Essentially, it means more oil into global markets from Venezuela. Remember, at the peak back in early 2000s. Exports out of Venezuela, oil exports out of Venezuela were some 3 million barrels per day. Recent reports suggest that it's not even 1 million barrels per day. Actually far lesser than that with U.S. sanctions, blockade, etc. So, the trajectory of exports, the quantum of oil which goes out of Venezuela is higher. We can quibble about whether infrastructure is there, people are there, and it'll take time, lots of investment because it's been neglected, and et cetera, But over a period of time, that less than 1 million barrels per day of exports will go higher. And that essentially is what I'm talking about, the fact that this is negative for oil prices in the long run. That's sad. Now, Trump, of course, is saying that there is a second wave of American attacks, which perhaps will come if cooperation from the remaining Venezuelan leaders of the government, the current government, is not forthcoming. So, for example, you have the vice president in Venezuela essentially saying that, well, this is illegal, this is terrorism, et cetera. Rubio has come out and said, well, they need to cooperate with, of course, the current U.S. administration. We'll see how it goes, but Trump already saying, well, we're prepared to go in again if the cooperation is not forthcoming. UN Security Council will hold an emergency meeting on Monday. I suspect not very much will come out of it, though. OPEC Plus has agreed to keep production steady, and this was widely expected. The meeting was over the weekend till the end of March. But importantly, they said that and remember, Venezuela is one of the founding members of OPEC, along with other Middle Eastern countries. They said, OPEC Plus delegates said that they did not discuss Venezuela and what has happened there over the 10-minute video conference. So that's a big global story. And think about it, right? It's not just about Venezuela. It's not just about Venezuelan oil as well. This will send what U.S. has done in Venezuela with the capture of Venezuelan president. I mean, it's going to send a chilling impact, a chilling effect across countries around the world. Latin America, of course, the Western Hemisphere is one. But even countries far-flung, Africa. Marco Rubio, for example, is on one of the networks in the US essentially saying he was asked specifically whether this is about Venezuelan oil. He said, no, we've got enough oil under our own land. We don't need Venezuelan oil. This is about fortifying US's supremacy in our region, which is our hemisphere, which is Latin America, even Canada, etc., etc. So I would expect that with this kind of action, countries will fall in line. I mean, I would say even countries like Russia, countries like, who knows? China, of course, is a holdout. We'll have to see what they do. But the action shows that Trump and the US are not just talking. I mean, they're ready to act if necessary. So right, wrong is a separate matter. But I think this will send a very, very clear message that, they're up for anything, basically. I'll just leave you with levels here. So markets, the Nifty Bank, etc., hit all-time highs last Friday. We've been creeping higher, and finally we kind of took out those previous highs. And this is the pivot level, right? I mean, we, by the way, had a test of the 40-day. Actually, we broke the 40-day moving average, but those supports held. And now we're above the 20-day. So those are the levels, 25,540. You can look at extensions on the higher side. But for now, I'll just put out the 20 days. 25,540 on the Nifty, 59,277 on the Nifty Bank as well. So a lot of focus around, of course, what's happening with geopolitics right at the beginning of the year and implications for single stocks. We'll talk about all of that in our top 10 segment. But Nigel has walked across with what the positioning is like as far as the F&O market is concerned. Nigel, over to you.
Well, before I went into the break, I said, before I come back, I won't be surprised if we are at fresh all-time highs. And on Friday, in fact, we had both the Nifty and the Nifty Bank go ahead and visit those levels. Well, in terms of participation, the DIs and the FIs, both of them were buyers. But keep in mind, the FI participation is very low. As the course of the week does pick up, in fact, you'll see participation as well pick up from the FIs. But clearly, there were signs of short covering on the Nifty itself. Nifty went up, the Nifty open interest was down, and there were signs of long build-up that we saw on the Nifty Bank. And that perfectly reflects with what the FI activity showed, because they covered some short contracts and they added some long position, which showed you there's a swing factor of close to around 14,000 contracts out here. But keep in mind, they're still net short with 89% of their positioning on index futures on the short side. What also added to the enthusiasm was the FIs. They didn't just cover some shorts. They also wrote some puts. And they wrote puts rather aggressively in Friday's trading session. And there were a couple of strikes that were active. 26,300, 26,250 put, both of them very, very active in Friday's trading session. Just one word of caution out there that the Nifty PCR, because the kind of put writing that was seen both from the FIs as well as other market participants, the PCR has perked up closer to around that 1.5. Normally, we see some kind of consolidation, some kind of pause, which isn't so bad when the PCR goes to the upper end, which is at around 1.6. So just keep that in mind. The Nifty, well, support levels come in at the low that we saw on Friday. And otherwise, you're looking at the 20-day which is ballpark around the 26,000 odd mark. But I think the trend seems to be up on the Nifty. You have a lid on crude oil prices, what's going on with regard to Venezuela. Also, there is some cushion for rates softening globally. If crude oil is going to be well behaved. And then there'll be that enthusiasm in the run-up to the budget 2026. Put all that together. I think the trend for the Nifty could be up, at least for the next 18 to around 20 trading sessions in that run-up to budget 2026. Stocks to track post the Venezuela issue. Well, beneficiaries from the US takeover of Venezuela oil could potentially be Reliance because of that GRM factor out there. They could get some cushioning out there. And we've seen that in the past. And ONGC, because of the outstanding dues, could come to them. While I'll also keep an eye out on gold financiers. Yes, these stocks have run up considerably, but gold could remain firm. And also, you could see the cost of borrowing could soften if central banks, go ahead and cut rates. So I think gold financiers will continue to remain in focus, putting up a few of them up on the screen.
Indeed, spot gold prices did move up 1.5% on the back of the geopolitical tensions. But for now, Asia is very, very strong, and they're shrugging off any sort of noise on the geopolitical front. You've got a 2.5% gain coming in on the Nikkei, that's the Japanese index, which has its first trading session of 2026. It was shut last week on account of the New Year holidays. And the other big mover is the Korean market. And across the board over here, it's the defense stocks which are doing very, very well. So in Japan, it's Kawasaki Heavy Industries, Mitsubishi Heavy Industries. They've gained close to about 6%. In the Korean markets, it's Hanwha Aerospace, Pung San, these stocks are all trading higher. So defense seems to be the theme across Asia. Hang Seng is flattish, just up close to about 0.1%. But let's get to the equity calls as we begin trade get set for trade in India. Venugopal Gare of Bernstein says India has entered 2026 as one of the most expensive markets globally with 20 times plus forward PE. This compares with a high of 15.1 being the average across 15 economies that they are tracking. They say we are back to a phase of hefty valuations across markets, which in the past have rewarded cheaper markets well, as opposed to the phase when you started FY24, when more expensive markets attracted flows and got costlier. Moreover, their recent report discusses how years with limited catalysts are more of a valuation play and catch-up trades rather than being earnings-driven. He adds, while 2025 has been a modest year for earnings, even after assuming a 13.5% earnings CAGR till FY28 and 19 times multiple on the forward EPS, they come with a nifty target of 28,100, which is a modest return of 7.5% this year. Their focus is on absolute return. They have cut the India rating to neutral.